Alright, so in this video I'm going to be teaching you how to place your stop loss and your take profit targets correctly. Week out is another thing because we are going to really be dissecting how to avoid week out trade in this video. Whether you like it or not, this Trump market has been crazy. There's a lot of week outs currently on this market. So I have this little trick that I usually use on how to avoid week outs. I'll show you some examples on the chart when we get to the chart, right? Because guys, whether you like it or not, week out is going to affect your win rate drastically. It's going to affect your win rate bad because there's basically no difference between this trade and this trade. This trade hit your SL totally. This trade wicked you out. So it's still the same thing. It's still the same amount of loss you lost on that trade. If you reach 2%, you lost 2% here and you lost 2% here. There's basically no difference. So if you try your best to avoid as much week out as you can, it will increase your win rate. Alright, so coming over to my chart right now, right? Let's go over here, right? So how do you trade? Right? How do you trade? The first point in trading is to look for an area of interest, right? We look for an area of interest and then we see how price reacts from area of interest. So in this case, let's say we are looking for buys. We were expecting a break, right? And a retest to buy, right? So at the break and retest, we will now be expecting an engulfing to buy, right? So assuming this trade is like this, right? On a normal day, how are you going to enter this trade? You will come, take your profit to, you take your long position to, then after the engulfing, you will enter, right? And then you will put your stop loss below this previous low, right? And then you target 1:2 or thereabouts. This is how everybody trades, especially us that trade a set and forget strategy. This is how we trade, right? So this is just an ideal trade setup. This is how an ideal trade setup looks, and it's basically the same thing with short positions, right? It's basically the same thing with short position. You have a break and retest under, then after the engulfing, you enter and then you put your stop loss above this high. But now the question is that sometimes markets can after giving you the engulfing candle you are looking for, it can also come back into drawdown and sometimes weak you out like this before going in the predicted direction. And sometimes it's very annoying. So this is how I avoid weak out. So let me show you with this example on how I avoid a weak out, right? Then we'll go to the charts and then I have weak out example on live trades I actually took to avoid some of these weak outs. So we'll be dissecting everything together and then I'll show you how it's actually affecting your win rate because it was happening to me. Then I now found a trick that I usually use to try and avoid this weak out, right? So now here is how I avoid weak out, right? Here's how I avoid weak out. So after the entry, assuming now, because these are the entry time frames, 1 hour, the 30 minutes and the 15 minutes. Now assuming this right here is the 1 hour chart, right? Assuming this right here is the 1 hour chart, so I'm entering on the 1 hour time frame after the engulfing, right? So if I enter after the engulfing, I know I'm supposed to put my stop loss here, right? I know I'm supposed to put my stop loss below this low, but where exactly below this low am I supposed to really put my stop loss? Is it exactly here or few pips or maybe two? I mean, if your stop loss is too far, it's also a bad thing, right? So where exactly, right? So this is the trick I usually use, right? Because this stop loss placement is very important because you might be correct in the overall direction eventually and you will not actually, and markets will just like hit your stop loss, right? So if this is the 1 hour time frame, here's how I do mine, right? If this is the 1 hour time frame, I'll just enter and put my stop loss here first, right? Then I'll now go over to the 30 minutes time frame, right? Are you with me? So if I'm entering on the 1 hour time frame, I will put in my stop loss in correlation with the 30 minutes time frame. So the time frame immediately after, if I'm entering on the 30 minutes, I will put in my stop loss in correlation with the 15 minutes time frame, right? Why? Just because this lower time frames has more structure, it has more price action, it has more structure points in the market, right? So I want to find the safest structure points that I can get. So if I'm entering on the 1 hour, I'm actually putting my stop loss on the 30 minutes time frame, not exactly the 30-minute structure point. Let me explain what I mean. So if I enter here, for example, on the 1 hour, all I'm looking for is for my stop loss on, if this is the 1 hour time frame, right? I enter here, I will put my stop loss here, but I'll go to the 30 minutes time frame to look for where under this structure point am I supposed to put my stop loss, to be honest, right? So I know my stop loss is supposed to be under here, under the 1 hour, yes, but where inside here is it supposed to be? Then that's where I will now go to the 30 minutes to look for all those points, right? So I'll show you live example, right, on what I mean. So if this is the 30 minutes time frame, for example, if I enter here, I'll put my stop loss here first, then I'll now go to the 15 minutes to know where exactly under this point, I'm supposed to put my stop loss. Is it here? Is it exactly here? Is it here? Where exactly am I supposed to put my stop loss? I just know it's supposed to be under here, but I'm just trying to look for where under exactly is the safest for me to put my structure point. And the lower time frames will actually give you more structure points so that you know where to put your stop loss, right? So I have examples on some of these pairs right here, and I'll show you how I usually do it, right? I usually just come under to those time frame. For example, if I'm entering on the 1 hour time frame and I'm on the 30 minutes, so if I start looking for where to put my structure point, I'll just look for a little bit of support and resistance under this point, and then I'll usually just mark a box like this, right? And then put my stop loss just right below those box, right? Same thing for a sell example, right? Same thing for a sell example. If I'm entering here and I'm supposed to put my stop loss above this high, I'll go to the immediate time frame after it. For example, if this is the 30 minutes I'm entering this chart, I'll go to the 15 minutes under here, and then I'll now mark a box like this, a minor box of support and resistance, depending on what I see, right? And I think is the safest. Then I'll put my stop loss right above that area. Usually price, it will come like this. For example, if it's planning on wicking you out, sometimes it might wick you out here, but if you put your stop loss above some of those zones, it will reject from that zone and actually go back to enter your take profit. So let's go to the chart and let me show you exactly what I've been explaining since, right? Let's go to the chart and let me show you what I've been explaining since. This video might be a little bit long, but just stick with me here. So I have wick out examples that I've taken, right? And let me show you what I mean. So let's go to the lower time frames. Like I said, these are the time frames you're going to be working with, right? So all right, so right here is a wick out example that happened, right? Let's invert the scale back. Right here was a wick out example that happened one time that actually I avoided, right? I'm just putting it here to show you that if you would have actually put your stop loss there, you would have been wicked out. So here's how this trade works, right? So this was how the trade was looking. It created a new low and it created a lower high. So what are we supposed to look for? It's like a break and a retest, right? So what are we supposed to look for? Engulfing candle. As you can see right here, this engulfing candle happened right here. So what happens? We'll enter on the next candle. So this next candle after the engulfing, that's where we're entering, right? Great. Now, for me in this trade, this high is way too far, because from the momentum of the market, it doesn't look like price has the momentum to actually get here, right? So I just need to find a safe place to put my stop loss, right? So if I enter at this candle, I'm supposed to put my stop loss above this support and resistance area, just like this, right? So this is how the trade will be looking. But if I had gone down to the 30 minutes time frame, like I said, if you enter on the 1 hour, go to the 30 minutes, right, to look for the precise point to put your stop loss, right? So if I go over to the 30 minutes time frame, just like this, and I mark that box well, you can see there's way more touches above here, way more touches. So if I just increase this box above, you can see that price rejected here. Let me show you exactly what I'm saying. So you see that price rejected here, price came back, rejected here, price came back here, rejected down, price came above, rejected up. You can see that there's multiple rejections. So all I know is that price might possibly come back here again. So I'm supposed to put my stop loss above this box right here. So this is exactly how I put my stop loss. You see, these extra pips gave me 1:2. Did you see that? So that's how I took that trade last week, right? So let's go to more examples. For example, right? So, all right, second example. So we have more examples here on GPP card now. If you look at GPP card, this is the 1 hour time frame, right? So what do we see here is that price has been coming up bullish, right? Creating higher highs and higher lows. So this was how the market was moving, right, on this example now. So now we now had that break, right? And at the retest, we are looking for engulfings to take the trade. So as you can see, after this engulfing, you enter on the next candle after the engulfing, right? Enter after the next candle after the engulfing and put your stop loss where? Above this high. Do you see that? I'll put my stop loss above this high. Now, this is how the trade is supposed to look like. But what happened here? I got wicked out. I got wicked out, right? So I actually avoided this loss, and I'll show you how I did it. Even if I extend it and this one did not really wick me out, you can see that this one actually wicked me out, right? So how do you avoid this loss? Like I said, we're on the 1 hour time frame. Go over to the 30 minutes time frame to look for where you would have entered, right? To look for how to avoid the wick out. I just do this extra thing just to avoid wick out, right? Now, on the 30 minutes time frame on this chart right now, you can see that I supposed to put my stop loss above that high now. Do you see? So now I can now mark another box here. You can see. Mark another box and put my stop loss above that high. And then target 1:2. Now, if you look at this trade, it took quite some time. I was holding this trade for so long. And you can see right here. And as you can see, that little box played out. Do you see how I avoided that wick out? Because this trade would have been a win and I would have just lost. Now, another trade example is this one right here. Now, I'm not promising you can avoid every single wick out that happens in the market, but I'm just telling you that if you avoid as much wick out as you can, right? If you avoid as much wick out as you can, your win rate will increase substantially. So this right here now was another trade I actually took, right? So what happened here now? The break, the retest, and an engulfing, right? These are also another engulfing. So you enter what? On the next candle after the engulfing. And now we are on the 30 minutes time frame, as you can see. So we know we are supposed to put our stop loss above this high right here, right? That's what we know. We are supposed to put our stop loss above this high. But let's go over to the 15 minutes and see how it looks. Now coming over to the 15 minutes, this is where we are supposed to enter, and then we are supposed to put our stop loss above this high right here. So we'll mark a little box above there, just like this, and then we'll put our stop loss above this box just like this. Now in this case, as you can see, we also got wicked out, right? We got wicked out on this trade. So that's what I mean by you cannot avoid every single wick out, but if you try your best to avoid as much wick out as possible, right? Because it's impossible to avoid every single wick out in the market. Wick out is definitely part of the game. It's going to happen, but if you can avoid as much wick out as you can, right, you will increase your win rate by maybe 20 to 30% more, right? So on this same pair, coming over to the 1 hour time frame now, on this same pair I took a trade, right? I took this pair on the 30 minutes actually. All right, another example on GPP card. Of course, I showed you two examples on GPP card before now, right? These two examples right here, right? One was a win, one was a loss, right? Now let me explain this third trade now that will put why I put my stop loss above this high, right? On a normal day, you would have entered this trade. On a normal day, you would have entered this trade here after the engulfing, and you put your stop loss above this next high, right? So you put your stop loss like this, something like this, and then you target 1:2 or whatever, right? Now, in this case, in this scenario, right, this trade was a win, right? Whether you did this trick or not, this trade would have been a win, right? But I'm explaining why I put my stop loss above this high, just like you have seen here before, right? Just like this trade, right? So just this little thing that I'm showing you now. Now we are entering. So now, why did I put my stop loss above this high? You can see that we entered this trade on a 30 minutes after the engulfing. So what do? Again, we go over to the 15 minutes time frame. Go over to the 15 minutes time frame. Mark that the high you're supposed to put your stop loss above. Mark the high and put your stop loss above the high. Target 1:2. W's in the chart, right? That's how it works. Like I just said, if you're entering on the 1 hour time frame, know where you're supposed to put your stop loss on that 1 hour time frame. Then go to the lower time frame directly below it. Mark a box above that high, and then put your stop loss above that high. This little thing, just this little thing, has changed my win rate for me, right? That's changed my win rate for me. So I have another example now. Euro GBP. I want you guys to analyze this one. All right, coming over to Euro GBP now, right? I want you guys to analyze this one and find a way to avoid this wick out, right? Just like I taught you, right? So this is a trade that got wicked out, as you can see right here. But I want you guys to analyze this one with your eyes. So this right here is the break and the retest, right? There would have been a trade here. This is the another retest, right? Same break, same retest, engulfing. So assuming you miss this one and you're entering here, on the normal day you're supposed to put your stop loss where? Below this low, right? But if you do what I asked you to do on how to avoid wick out, you should be able to get this trade correctly. So now let's go over to the 30 minutes. As you can see, we entered on the 1 hour. Let's go over to the 30 minutes and see whether we can avoid this wick out that happened in the market, right? This trade right here is actually the trade on the thumbnail right now. This trade right here is actually the trade on the thumbnail right now, right? So let's go over to the 30 minutes and let's see if we can avoid that wick out. So as you can see right here on the 30 minutes, what do? You come over to where you're supposed to put your stop loss, mark a little box below that area, right? And then you put your stop loss below that box. And you see, this was now a 1 to 4 risk to reward trade. That little box is just structure point. Sometimes it must not be just a little box. Sometimes it might just be a strong support and resistance area like this, right? Just find a safe zone to keep your stop loss. It must not always be just a little box below. Sometimes it's just a lot of support and resistance. Just find the safest point for you to keep your stop loss, right? So now that we have analyzed all these pairs, let us count them. Now, take for example, we are risking 2% per trade. 2% per trade, right? So first trade, CAD JPY. Now, we are trading normally. Remember from this video, if you are trading on a normal day, from this video, if you didn't apply this trick, you would have lost what? Minus 2% here. Minus 2% on this trade if you didn't do this trick. If you did this trick, you have what? Plus 4% here. Right? So on a normal day, you are losing minus 2%. Let's go over to GP card. So from the examples I show on this video again, on GPP card, you would have lost 2% here if you are just trading normally without actually applying this trick, right? You would have lost another 2% here, which means your account is down minus 4%, and you will be up an extra 4% if you have done this trick, right? Here minus 2% again, right? And here on this trade you would have gotten plus 4%. So you would have won this trade, you would have gotten for plus 4%. Now we go over to Euro GBP, the last trade. Assuming we took all these trades, and you didn't apply this trade would have been another minus 2%. So you can see that because of week outs that are happening from this week out example video that I'm giving you, you can see that your account balance is minus 4% total. Now, applying this little trick that I gave you, keeping our balance at 14% profit, which is now keeping our balance at 14% profit just because we applied this little change, right? If you don't apply this change, you see that you will even be down minus 4%. It's not that much, but it's still 4% minus, right? You should be trying to win more trades, right? It's the same exact trade examples, just a little slight change. That's what made the difference between these two trades. As you can see, if you didn't apply the strategy, if you didn't apply what I just taught you, you just enter the market, you will actually be losing way more trades and it will affect your win rate. And by the way, me also saying that this trade is 14% in profit is me assuming that this trade was a 1:2 trade. On a normal day, you can see that it was actually a 1:4 risk to reward trade, right? Depending on where you took profit. But I'm assuming it's a 1:2, assuming all the trades are 1:2 risk to reward trades. So ladies and gentlemen, I really hope you learned something from this video, right? Because actually it took me quite a lot of time to actually make this video, which is ridiculous, right? Smash the subscribe button, is very important. It's free, by the way. You learn things here for free. And that's pretty much it, guys. See you guys next week. Remember, we always do Sunday swings, or we always do Sunday analysis. I'll break down the trades I'm looking at for the week,